You can actually hear us. Good afternoon. You can definitely hear me now because I can hear my echo reverberate around the room. Thank you for being here. It's lovely to have a full room. It's always pleasing to have a full audience on a panel. I want to get cracking because we've got lots to discuss and we've got 45 minutes. We've cut it 5 minutes short. So I'll introduce the panel very quickly. To my left, Kostas Fragogiannis, Deputy Minister of Foreign Affairs for Economic Diplomacy and Openness in Greece. To his left, we've got Sigmar Gabriel, Chairman of Atlantik-Brücke. To his left, Bertrand Badre, Chief Executive and Founder of Blue Like an Orange Sustainable Capital. To his left, Isabelle Mateos Lago, MD of Blackrock Investment Institute, and Lord Mandelson. You're very far away, Lord Mandelson, but I can see you. Chairman, co-founder of Global Counsel. I could give you the background of all of them, but we would waste at least 5 minutes. So let's get cracking. Quick question to the audience very quickly. Be honest, who here predicted within 10 seats the result of the UK election in the last couple of days? Put your hand up if you predicted the result. There's a gentleman at the back, 2, a lady there, 3. There you go. Just 4, 5. That's which shows, and which is just as well, because Lord Mandelson, the first question goes to you. Worst Labour performance since the 1930s, biggest Tory majority since 1987. I've heard earthquake, I've heard seismic, I've heard historic. How big was Thursday, Friday morning's result?
Earthquake.
Yeah.
Earthquake at a number of different levels. First of all, we have recently grown used to weaker, more balanced, fractured coalition governments. And so to wake up on Friday morning with a government which has such a huge majority was quite dramatic. But an earthquake more so for 2 reasons. First of all, because the Conservatives did so extraordinarily well after 3 years of extraordinary incompetence. It was a completely undeserved result, but nonetheless, a very, very considerable victory indeed for the Conservatives and for Mr. Johnson, and of course an earthquake for my own party, completely unexpected and largely deserved.
If I had...
Are we speaking off the record? I didn't really check that.
I don't think we are, actually. I think this is on the record.
Oh, is it? Oh,
feel free to be as open as you like. I wish I had 50 minutes with Lord Mandelson and 50 minutes with each of them individually, but there's a big panel, so I've got to sort of move it on, but I'm going to come back to you, Lord Mandelson. Given that this panel is called A Look Ahead at Investment in 2020, Isabelle, we saw sterling jump yesterday, 133 against the dollar. We saw FTSE 100, FTSE 250 jump. We saw gilts rise, which you might not have expected. Is this Tory majority a buy UK assets label, approach, button? Is it an excuse to buy UK assets or not? Which, of course, have been underrepresented in portfolios.
I mean, I think it'd be fair to say that from a market standpoint, that was the best of all possible outcomes. In other words, not just avoiding a Labour government with an extremely anti-market friendly agenda, but actually having a Tory government with a large enough majority that it wouldn't be beholden to the most extreme anti-EU characters in it. So for the markets, this is highly reassuring, and it opens the perspective of repricing all UK assets, which had been under-owned compared to others. Does it solve all the problems? Absolutely not. Obviously, nobody has any idea what's going to be the shape of the future relationship with the EU. So it's not the case that all uncertainty has evaporated, but definitely a big risk premium has been taken off the market. And of course, it happened more or less on the same day as the news of the phase one trade deal between the US and China. If you put these two things together, these are two very big tail risks that are no longer with us, that have resolved themselves in a happy way for the markets.
I'm just going to skip one, Mr. Gabriel, if I may come to you. I'll come back to you, Mr. Badre. Given that we talked about relationship with the EU, what's key now isn't the withdrawal arrangement. What's key is what is Boris Johnson's future relationship with the EU? He's got to obviously stipulate that by probably within a month or two. What sort of relationship do you think the UK wants when it comes to its trade, services, but trade is going to be the big arrangement going forward? What sort of relationship do you think Boris Johnson wants with the EU going forward?
I don't know what Boris Johnson really wants, but I think he campaigned that he told his people that it would be possible to get the benefits of the European Union without getting the responsibilities. And I think if this is the starting point for the negotiation, it will be very difficult to come to a solution during the year ahead. And normally we decided that the next agreement between the European Union and Britain should be negotiated in 1 year, which is, I would say, only possible if it's not a very ambitious negotiation. On the other hand, if as a European, as a German, if I would search a positive signal out of the decision we will get at the end of the year, then of course, could an agreement with Britain and the European Union, something like a blueprint for other neighbors of the European Union, where we will not be able to bring them as a full member inside the Union, but where we know that we have an interest to get them as close as possible to us. Maybe this is something where the ambitions of the European Union could be higher than the ambitions of UK, but if there would be an agreement which you can use also for other regional players where we have to deal with, look to the Ukraine, or look maybe in some years from now again with Turkey and others, this could be the idea how to use the agreement between Britain and the European Union as a blueprint for the negotiations with them, because I do not think that we will see a bigger enlargement of the European Union during the next years.
Deputy Minister, do you see that? Is that a possibility? This could be a blueprint, as Mr. Gabriel says, for other types of relationships?
There is a need for additional enlargement of the European Union. It is very important that the vision of one unified European Union will one day become true. I do not know whether it's going to be next year or in a few years to come, but it is very important that eventually we will consolidate every nation of the European Union into one. Obviously, Brexit is a sad thing for Europe. And in one way or another, it's going to be a blueprint in as far as how such an action may ever be realized again in the future. But I will be more than willing to see the day that all European countries will become one.
Mr. Badre, you have many hats, a former diplomatic advisor to Jacques Chirac, former World Bank managing director. Put your Eurotunnel board member hat on. What would a board meeting of Eurotunnel look like yesterday?
Well, as Isabelle said, we got some short-term clarity. I mean, the last 18 months have been marked by the ups and downs of the inventory build-up and inventory sale. And so we had a very bumpy year from an operational perspective. We had to get ready every 3 months to make sure we will be able to carry the trucks and the people on the day of the D-Day, and the D-Day kept moving. Now we have some clarity because we know Brexit will happen. Where we don't have total clarity is on the trade deal and what comes next. But at least now we know it's going to happen, so it makes our life easier. We get ready for the customs, we get ready for all this, and to a certain extent, the fact that it has taken so long, basically we are ready.
Lord Mandelson, as a man that's negotiated trade deals for the EU as in your former EU Trade Commissioner role, before I ask you a question about the possibilities by the end of December when the transition period ends, did you vote for the Labour Party? I threw that one in very subtly, like you weren't ready for it. Did you vote for them or not?
I'm going to disappoint you by revealing a little-known legislative fact in Britain, which is that members of the House of Lords are not allowed by law to cast a vote in an election for the Commons.
Would you have voted for the Labour Party?
So you were happy, huh?
I don't answer hypotheticals, I'm afraid.
Well,
No,
we know that you weren't a big fan of Mr. Corbyn.
The straight answer
Yeah.
is I would have voted for my party because I'm a team player. I am a fully paid up member of that tribe. I am biologically attached to the Labour Party through family history, and therefore I would have voted for it.
Even though you weren't a fan of Jeremy Corbyn.
But everyone knows, because I make no secret of the fact, that I think that to win, the Labour Party needed a very different leader. I mean, somebody who had a sense of his country and patriotism to it and an understanding of its economic and international interests, which I think is lacking in him. Standing on a program which, was at best sort of a practically challenged program, if I can put it in that way, and at worst I think would simply be described as a fantasy.
What's doable by the end of the year when it comes to a deal?
I think Sigmar is right when he says that a deal is possible between Britain and the European Union. Well, if two things happen. One, it's a very low ambition, de minimis deal, a trade deal. Basically, it would be a sort of tariff-only border tax deal rather than one that dealt with anything behind the border. So, you really would have the most limited rights of access to the single market. It would be highly conditionalized because in those circumstances, Britain would not be signing up to any of the market product, single market rules of the European Union. It would simply be, as I say, a de minimis tariff-only free trade agreement. And it would be quite straightforward. Or the UK accepts entirely that it's going to follow all the rules of the single market without exception, and on that basis, it would achieve a very easy deal. It would, in effect, be saying that we are leaving the European Union, but we're going to remain entirely within the economic system of the European Union. That too would be relatively straightforward. But Britain has said it doesn't want either of those two things. It is pursuing a negotiating strategy that can be summed up in the word cakeism. It's a cakeist strategy. And the cakeist strategy is that we want all the benefits of free and open access and rights in the single market for goods and for services, but we also want the freedom to diverge from those standards and rules when we choose. That is cakeism, having it and eating it at the same time. Now, if Britain wants to achieve anything that remotely approximates to such a complicated trade agreement, it would take years to achieve it, and even then, ultimately, it would disappoint Britain in what it imagines is achievable.
Mr. Gabriel, on the subject of, because I've got to move this on very subtly and seamlessly, on the subject of party leaders and politics in your own party, of which you were a leader of for many years.
It's better to debate about UK.
In the SPD in Germany, of course, we've had a recent elevation of two left-leaning leaders. The SPD, of course, part of the coalition. Your assessment of these leaders and the pathway that the party's taking. B, does the coalition last? Does Chancellor Merkel see out her term through December 2021?
Yes, I think the Social Democrats will stay in the government because they are afraid about the results of the next elections. And maybe after the election in UK, they will be a bit more afraid. But I think it's not a good idea to stay in government because you have fears and you're afraid. You should be in government because you want to rule, you want to govern. But unfortunately, we are in a situation where everybody in Germany is afraid about new elections. So the government will be stable, but not as dynamic as it should be in the situation Europe is. And you see that there is a new competition between France and Germany, who is the real leader of Europe, and others thinking why those both countries are asking for multilateralism outside of Europe, and inside Europe they are going to organize bilateralism. So normally we need a more ambitious and dynamic German government. But coming back to the questions, what's happened in many of the progressives or social democratic parties of Europe, I think you can see a consequence of 30 years of globalization, where we discussed for 30 years that globalization means reducing all the borders for data, for finance, for migration. The idea of globalization was opening of the borders. Now people are thinking, where are the borders of opening? And especially those who are more vulnerable in our societies, they are searching for more security. And they don't want to go in the direction of a far left, but they are searching of a new kind of balance between open borders and the borders of opening. And that you can see that I would say this is one of the reasons for Brexit. That's one of the reasons we can see populists and anti-Europeans in other parts, and you can see it also in Germany, and you can see it in the voters of the traditional voters of the Social Democrats, which are mostly more vulnerable for economic developments than many others. That's behind the scene, and it would have been better if Social Democrats, UK, Germany, elsewhere, would remember their own roots and their responsibility for these parts of the society.
Deputy Minister, there was a period post the financial crisis, 2008-9, where Greece in the sovereign debt crisis was the focal point of Europe. I think the baton was handed over to the UK after Brexit. Now that at least this election clears up one part of Brexit, at least the withdrawal aspect part of it, does the spotlight, deservedly or non-deservedly, go back to countries like Greece, which still have their own legacy issues from the GFC, the great financial crisis, and before?
Well, we used to talk about Greece being the black sheep of the family. Now Greece is back, so it is the white sheep of the family. There is a tremendous momentum of opportunity in the country. There is political stability, and thanks to the resilience of the people and the support of our partners in the European Union, we managed to bring the country back to what it is today. As you well know, and the panel will agree with me, the markets of the world, and in particular the capital markets, are merciless in predicting what the future will bring. And the truth of the matter is that nowadays in Greece, we borrow at 1.37% for the 5-year bonds, when 7 months ago it was 5.4. Our yearly bonds are 0, and the 3-month bonds are negative. So there seems to be economic growth, not only in financial sense, but also in the sense of Greece becoming an investment destination for many businesses, many companies, and many countries that are willing to come and invest in the country.
You're still burdened with an astronomical amount of debt, though, debt in its own right and debt relative to GDP.
Yes, but if you put your ducks in a row, and if you put your house in order, then everything is achievable.
On the subject, Mr. Badre, of globalization, one of the big discussions is, does finance need to change? Does the world need to change? Does finance need to change? How does one create a world where finance and sustainability can both be used for the good of all? Is it possible? And this from a man that wrote a book, Can Finance Save the World?
Yes, it's possible with a touch of magic. I think what is interesting, 4 years ago, we signed the Paris Agreement called COP21. We are just unable to close the COP25 discussions in Madrid today. 4 years ago, we agreed in New York on the so-called Sustainable Development Goals. So basically, we agree on a roadmap of the 21st century, which was signed by everybody. I mean, the New York ones are signed by everybody. Now Paris, we have somebody who has left the room, but still. So we have a roadmap for a sustainable development for the 21st century. The point is, at that time, we did not really discuss how to finance that. So people still rely on public money, which is very little, and nobody really discussed how to mobilize private money. And one of the issues with private money, as we see today, is that, as Mark Carney, governor of the Bank of England, said 4 years ago, it's facing the tragedy of the horizon. So nobody is really in charge of the long term in the system. And we are very much attached to basically what Milton Friedman said 50 years ago, the social purpose of business is to make profit, which has two footnotes. One is financial profit, and the second is short term. And so based on that system, which is intrinsic to the way capitalism is operating today, there is no chance that naturally, market will address the challenges of sustainable development. So it means that we have to let the forces of market, the consumers, the investors, the people working in companies push and say, that's where we want to go. And look at the success, with my kids of Greta Thunberg, I see that every day at home. But we also have to address the regulatory flows which prevent to go in that direction. But the system will not go naturally there. So you will have a lot of nice examples of signs of goodwill. And people, yeah, I'm going to do that, I'm going to do that. But you see there are no real standards, there are no real way to see whether the promises are fulfilled, etc. And at the end of the day, 4 years after New York and Paris, we are off track. So the system does not correct itself. The problem is that we need to work on the system, basically to open the hood and check the engine. But contrary to the 70s, where basically the US and the UK, Reagan and Thatcher opened the neoliberal model, or contrary to 1945, where the US opened the model, there is no master of the world today. So the G7, G20, all these organizations are more in damage control mode than in repair mode. So how do we design this system? I think this is a big challenge. If we don't get there, we have an issue. And since we're discussing investment in 2020, I think it's going to be one of the first years where pressure of the market will be felt by investors. I think people are more and more demanding that money goes where our values are. Is it already done? No. It will take a lot of time. But I think that's one of the issues which is now on the table. How do you address sustainability in an effective manner? We're not there yet. We're getting there. And if I may just add a little comment,
yeah.
I think we are entering a second thing which is extraordinary. 2020 will be the first year where all of us, you in this room and us on stage, will realize that low or negative rates will stay. It's not an accident. It might be a new paradigm. And for investor, it's a big change. It's a change for banks, it's a change for insurance, a change for pension funds, etc. What do we do with that? And now we have to cope with that issue. And it can be the best or the worst of both worlds. It can be the worst if the zero rate paralyzes you and say, I don't know what to do, so I'm continue to do the same because I don't know what to do. Or it can be the best if it forces us to think out of the box and be a little smarter than usual and move in different directions. That's the questions of what do you do with public money? We have this big environmental transition to finance. Is it time to mobilize a little bit of free money to get there? When we are private investor, is it the moment to try to put your money at risk in an interesting manner? instead of buying negative rates bonds from France, Germany, even Greece from time to time, which is great for our taxpayers, but bad for the world.
Are we, as Mr. Mateos, Lago, are we stuck in this sort of zero or near zero rate hell? It was the year where everyone thought the Fed was raising rates, but they reversed direction. The ECB is stuck in first gear. The BOJ has been stuck in the same gear for well over a decade. The emerging nations are cutting rates and will continue to do so next year. Where's inflation? Where are interest rates where they were pre-financial crisis?
Yes, well, I mean, I'll skip the history question. I think the important point is where are we going? I mean, first of all, in terms of, I mean, this debate around central banks and negative rates or ultra-low rates is often very one-sided. One reason why we're seeing just in recent months a reacceleration of global growth, and in particular in the US, to some degree in Europe, is because central banks, notably the Fed, has cut rates 3 times, delivered significant easing, the ECB as well, and guess what? It helps, and this rebound in growth is helping everybody. Now, why are interest rates low globally, and why is the consensus now that they're going to remain well below the pre-crisis level for the foreseeable future and beyond? Well, there's a number of structural reasons, but just to cite a few, let's say 3. One is there's been at least a decade of underinvestment. Growth, productivity, structural growth has fallen. Growth is lower, interest rates are lower. Number 2, demographics, which pushes up saving. And number 3, there's a craving for safety in the world. There's an incredible amount of demand for safe assets. And you know, when people say, oh, interest rates are low, it's not the rate of return on capital that is low. In fact, the rate of return on capital in the economies as a whole is as high as it's ever been. And if you look at the labor share of income, that is the share of growth that goes to workers in the economy as opposed to capital, it's at a historic floor, at a historic low. So the problem is safe interest rates are low. And why is that? Because people don't want to take risk. They don't want to invest. They don't want to do anything constructive, so they park their money in government bonds. And that's the problem. But I think it's important to see it as a failure of risk-taking and a failure of investment rather than central banks messing people around, you know, for the cutesy of it, as is often portrayed in Europe. Having said that, and I would, you know, rebounding on what Bertrand just said, the momentum that finally the green transition seems to be getting is an opportunity to get out of that in a positive way, because there are massive investment needs. If these investment needs are deployed and in a way that is growth friendly, that is productivity friendly, that a lot of it goes into new technologies, etc., you can in fact deliver a higher level of potential growth and high interest rates in a way that, you know, all the savers in the world will be much better off, and the planet will not be destroyed. So it's a fantastic opportunity, but things are moving very slowly. I mean, Bertrand is impatient. I think this year has been, I mean, what I see with our clients on a daily basis, has been really a pivotal year in the sense of asset owners, pension funds, sovereign wealth funds, and others realizing this issue of climate change is really serious. And this is something I need to ask myself serious questions about as an investor, not as a citizen who's worried about the planet, but as an investor, I really need to think hard about this. And it's a brand new issue. So people are struggling to come to terms with it, because how often is it in a career as an investor that you come up with a completely new issue? It never happens. It's happening. I think it's there, but don't be impatient. We'll get there.
Lord Mandelson, I want to move on to trade, which possibly, if you're a financial market geek like I am, and I know Isabelle is, was the big theme of the year. We had a phase 1 agreement announced yesterday by the US, which was encouraging for the markets. Let's not even dream about phase 2, but it was a year decimated by the musings and the actions of the US, and consequently by the rebounded actions of China. Do you see a positive end game here in 2020, or is 2020 just an awful rerun of what we saw in 2019?
No, I don't think it's a rerun. I think it's a good staging post, 2020. I think people are going to be more upbeat, more optimistic about trade, and they would be justified in doing so. What you've seen in phase one, though, of course, is a phase one deal on one of two American strategies that are being followed towards China. I mean, one is one that focuses on the trade deficit to rebalance trade openings, advantages between those two great economies to try and tackle a little bit further, but let's not be too exaggerated in our expectations, the issues to do with intellectual property and enforced technology transfer. I think the United States was absolutely right to focus on those issues. Indeed, I actually think that President Trump was right to capture the attention of Chinese leaders in the way that he did, in pressing very, very hard for a leveling up of the trade playing field. So I think that's right. And I don't sort of dismiss the phase one deal. It is largely about the partial undoing and unraveling of tariffs that have been already put on in pursuit of the dispute, rather than something more structural or fundamental. But that leads on to my second point. The United States has always been pursuing two strategies. One is the pursuit of the level playing field, as I say, which is to increase trade between the two economies, in a sense to reinforce the embeddedment between the US and China in each other's economies. The other strategy that the United States is following is to do with technology and the flow of Chinese technology into Western markets and the flow of Chinese capital into Western technology businesses and startups, and access to vast amounts of data. Now there, the United States is pursuing a completely different strategy. It is one which is trying to, in a sense, ring fence, or if they ultimately had their way, put as sort of almost an iron curtain that would sort of segment the global data and information markets and the flow of technology, the globalization of technology in the world, and to contain China's technology growth. Now, do I think that's a good idea? No, I don't. Do I think it is practical and achievable? No, I don't. Do I think that if it were pursued very actively, it could have very harmful effects on the global economy? Yes, I do. I really think we have gone far too far in the globalization of our markets and the integration of our economies now to sort of reverse globalization in respect of technology. So I think that the attempt by the United States, first of all, to restrict the flow of Chinese technology and capital into the American market, well, you could say in a sense it's up to them, but I think it's probably counterproductive. The United States' attempt to impose that on its allies, for example, to force European nations to boycott Huawei, to strip out what Huawei is supplying to our telco systems and our 5G rollout, and to prevent us from using any Huawei supply kit in the future, is not realistic, it's not desirable, and it's not necessary from a security point of view. It would be the assessment that the security and intelligence agencies have reached in Britain, and the government may or may not agree with them in the coming weeks. But I think for us to see this sort of emerging segmentation of sort of the global technology market, which could spark a very real risk of a global decoupling between these two economies, is not a path we want to go down. I think I am a hawk on China in many respects. I'm a former trade commissioner. Who wouldn't be a hawk with China on trade? But I think that this sort of second pursuit, strategic pursuit by the United States to forcibly roll back China's technology growth, as I said, I don't think it's necessary, I don't think it's desirable, and I think it could have a very harmful impact on the global economy.
This is my second poll, just as we're talking about the US. Put your hand up if you think President Trump will be re-elected in 2020, many calling it the biggest geopolitical event of the year. It's not whether you want him to be re-elected, I just want a simple, do you think President Trump will be re-elected in 2020? Please put your hands up. Interesting. Panel, do you want to be brave and give me a yes, no? Not do you want him to be, just do you think he'll be re-elected? I know that's a brave question. Bertrand, go first. Yes, he will be?
I think he has a reasonable chance, yes.
Mr. Gabriel?
Depends on the Democrats.
Lord Mandelson?
I agree with Sigmar. I think if the US public were given an opportunity to plump for a viable, attractive alternative, they probably would.
Mike Bloomberg? I say that sort of semi-biased, having used to work for Bloomberg. Ms. Mateos Lago?
Yeah, I agree with the two previous speakers, but I think, the focus for 2020 is going to be in the 11 months until the election.
Yeah.
I think we're going to get a lot of volatility, almost irrespective of what the polls are showing, from both sides, people making a lot of noise and moving markets on the path to that election in November.
Deputy Minister, will he win?
Isabelle is right. I think the next 11 months will make the big difference, and among the issues that will be put to the American public is what Mr. Gabriel said. What is the alternative? What is the democratic opposition power? So I truly do not know. It depends.
I was stuck because with this impeachment crisis, I live in Washington as a caveat. You realize that in the famous swing states, the impeachment has a counterproductive effect. So 2 months ago, the Democratic, in particular Joe Biden, was ahead of Trump. Now Trump is back ahead of the curve in Pennsylvania, Michigan, and Wisconsin. So it's, as you say, it's how the Democratic Party handles it is a big key to this question.
Mr. Gabriel?
No, I mean, the answer of the question, who will be the next president and what will be the policy of the United States, is maybe the answer of the question, what is the biggest challenge for international investments? Because what we discussed before about climate change and other issues, that's always something you can only solve and can approach with international cooperation. Even China, I mean, the idea to arrest China, I would agree to Peter Mandelson, it's impossible, but if you want to discipline China, it's necessary to have allies and not doing by bilateral deals, whatever the outcome will be. Unfortunately, we live in like Ian Bremmer, the American analyst said, in a G0 world. There is no real order in the world. I mean, we, as Germans, we often blamed the United States to be the policeman, but on the other hand side, now we see what happens when there is no policeman in the street. And so how we want to address stability, economic growth, climate change, social inequality, the lack of resources for many poor people in the world without international cooperation. And this is the biggest, I would say, danger, that we are going further in the G0 world where maybe two giants will try to turn it in a G2 world where the United States and China, as Peter said, try to decouple markets. For us Europeans, for example, or Germany, that's a big danger. I mean, we are the most integrated, we're most integrated in the international value chain in my country, Germany, and Europe as a whole is the same. This was the role model or a success story for the last 70 years. Now, it's the danger that because if something hits these international value chain, of course countries like Germany or France and other Europeans, we are the first victims, and we are not able to act in this world. And I mean, now when Britain leaves the European Union, the danger in international politics is that we today, together as Europeans, we are seen as the last vegetarians in the world of carnivores. And now when the Brits will go, they all think we are vegans. And so we do not have enough approach for international cooperation if the US is heading in a way where they only want to organize bilateralism without international cooperation. Then none of these ideas to get back to growth and better interest rates by addressing climate change, for example, will realize them. If somebody like the US will go out of the international room, unfortunately, others will try to follow.
Well, I think just bouncing back on what you just said on the G0, I think G0 would be kind of okay in today's world. What would be awful is that we move to a G-2, where basically the big guys stop guaranteeing the public goods, but start produce public bads, which is exactly what is happening today. So I think that is what is at stake. If we move from a system where you still have some public goods produced and coveted by the system to a system where basically the hegemon stop playing their role and start to spread public bads in the system, which was at risk with the trade discussion this year.
But you see that others, this idea of my country first, you see others will follow. Look to what's happened in Brazil and others. So then this is the real danger, not only for investment, it's the danger for international stability.
Panel, as the panel is called, a look ahead at investment in 2020. Final question to you all. What's your investment call of the year? You can give a tip, some advice, a theme. What's your investment tip, Ms. Mateos Lago? I want proper tips from you. And you as well, Mr. Badre, as you run a fund. The others can, let's start with you, Ms. Mateos Lago. What's the tip of the year? What's the bet, the investment tip of the year?
Tip is stay invested. Just because the world is looking scary and uncertain and volatile, don't get out of the market. Global growth is going to be okay. We're not seeing, any meaningful odds of a recession, and the stock market is very likely to continue to deliver as it has in recent years. And don't get stuck with zero interest rates on your deposits. Just get invested in the market. Stay invested.
Lord Mandelson?
I think certainly stay invested, but invest in sustainability. I think investors will find that for all number of reasons, partly their own conviction, partly legislation, partly public sentiment, partly NGO activity, but also first mover advantage in a whole variety of different markets. Investing in the fight over climate change, sustainability, will, I think, bring substantial rewards. I also think that business right across the West, right across the capitalist system, needs to start being more consciously earning brownie points. I think that business needs to engage public opinion, both in relation to climate change, the environment and sustainability, but also on the subject of rewards. We need different and rebalanced rewards within our system, and I think on both those scores, business has a responsibility to re-engage in the public debate on both those areas of public concern.
Mr. Badre, perfect.
Yeah, so I understand you don't have the right to vote. I don't know whether you have the right to join me because you've made the most eloquent pitch I could ever dream of for my fund. So thank you very much, Lord Mandelson. So I think, again, I will repeat, and I'm totally biased because this is my business. After I left the World Bank, I created a fund with objective to bring together financial returns and impact. And so I believe sustainability is critical, and it's not a charitable business. It's really, as Isabelle said, it's not just climate change and inequalities, etc., are not just a risk which makes you scared. It's an opportunity to do things differently. And that's really where I think there are opportunities. You can make money in emerging market doing the right thing. And if I can just conclude, I say we've built our system, financial system, on two variables, risk and return. I think it's time to add a third variable, which is impact or sustainability. And that's really the challenge of the years to come. How can we combine these three variables to go in the right direction for us, for our kids, and for the planet?
Mr. Gabriel?
I totally agree to Peter.
Yeah? Go sustainable.
Yes, of course. I mean, the world needs technology, efficiency, to get renewable resources, because population is going up. When I was born, we had 2.5 billion people on the planet. Some years from now, it will be next to 10 billion. So it will not be possible to have sustainable growth and sustainable economic effects if we would try to organize the next 50 years of industrialization like we did with the first 50 years or 100. If we would try, we need 2 planets. Unfortunately, we only have one. So then the only solution is to invest in sustainability, in renewable energies, in renewable resources, in the productivity of those technologies. You can go out of the climate difficulties, but you need the instruments of the advanced industrial society, and their investments in technology and research and development are the most needed and the most sustainable.
My postscript to Sigmar would be go for hydrogen.
Hydrogen.
Go for hydrogen. Look at hydrogen. Look where that is going.
Yeah. Quick, before I go to the Deputy Minister, as a final question, put your hand up if you're invested in any way in sustainability, sustainable investments, impact investments, SRI, ESG. Hands up, come on, be brave. Wow, there you go. Listen to the advice, Deputy Minister.
Sustainability, stay invested, invest cleverly. To give you one example of what I mean by invest cleverly, and in as far as renewables and green energy is concerned, in Greece we have decided to completely shut down by 2028 all of our lignite power plant generators. So we heavily invest as we speak, and we are ready to attract foreign direct investment in that capacity in green energy, which is not necessarily the photovoltaic and wind farms that we all know of. That is high-tech project, innovation project that pertain to green energy and sustainability. And that will be my advice.
I gather there's a member of the Trump family speaking next door, which I'm sure everybody wants to dash to. I'm not going to move on, including Lord Mandelson. I'd like to thank the panel, Lord Mandelson, Isabelle, Mateos, Lago, Bertrand, Badre, Sigmar, Gabriel, and Kostas Fragogiannis. Thank you all for joining us today.